Welcome back. Headwinds for housing. Mortgage rates surging to the highest level in 7 years. The rate on the 30-year fixed mortgage now at 4.9%. We did get weaker than expected readings on housing starts and building permits yesterday as well. Joining us right now is the PenFed Credit Union CEO and President, James Schenck. James, great to see you. Thanks very much for joining us.
Great to be here, Maria.
So what can you tell us? What are you seeing from customers when it comes to mortgage demand right now?
What we're seeing is the economy is extremely strong, but customers have gotten very used to 3 or 4% 30-year fixed-rate mortgages. So we're seeing is 95% of consumers we survey across the country like their homes, but they don't want to give up their 3 or 4% mortgage. They're taking home equity loans. So our real story this year is our home equity lending is going to be up over 20%.
Wow. Even though the economy is so strong, all of these home equity loans are because they want to lock in this rate. That makes sense.
That is why the economy is strong. So with the low taxes, unemployment is very low. We hired 1,000 people alone in the last 3 years at PenFed Credit Union serving our nation. And our members, the demand for consumer lending is still extremely strong, hence why the Fed is raising to try to keep it from overheating.
Right.
They say all politics is local, so everyone in New Jersey is wondering if New Jersey real estate is going to be okay. And this is really a blue state issue, is these states with big unfunded liabilities in their pension systems, high tax rates. What do you see for these real estate markets in blue states with a heavy government cost on top?
We do see sales down 2 to 3% so far this year, but we do see the average home price, the average selling price, still up 3 or 4%. And the asset value has increased 5% year on year. So some of the fears that people are worried about, this mass exodus from these blue states, is not panning out.
That's interesting that you're still seeing that kind of demand and price increases on homes, even though you're seeing mortgage rates move up. So you're saying average prices are still up.
Absolutely. And let's look at
Where are the weak spots in the market?
Weak spots, Brooklyn and Manhattan right now. Third quarter was down 10% year on year.
In price?
Wow. In sales.
In sales, okay.
In sales, absolutely.
You see a lot of inventory, rising level of inventory, and people who are trying to get too much for their apartments and their townhouses. It's particularly in townhouses.
Yeah,
that there's been a lot of inventory and sharp price reductions, and they still can't move the property.
Absolutely. It's not quite a buyer's market here in New York. People keep looking for it, but it's becoming more and more of a buyer's market.
And is any of that, do you think, from the effect of the tax bill at all from some of these higher tax states like New York City, New York State?
The tax bills across the country have really allowed firms to hire, firms to grow, and when all economic cycles, people are going to buy homes. So we forget back in the 90s, or actually the 80s, 9% mortgage rates.
Wow.
Yeah. 10 years ago, or actually 12 years ago, 2006, we had 6% mortgage rates. 5% is still a great rate. But if you're sitting on a 3 or 4% rate, why do I want to move? I love my neighbor. I like where my kids are going to school, but I want a new kitchen. I want a new thing. So we're seeing about $100,000 to $120,000. They're doing things to fix what they currently have and not moving. So
people got used to 0% interest rates.
But if you get people need to be careful. If you get a home equity loan, they're adjustable. Those are adjustable rate loans.
We actually do both. So PenFed, we see about 40% fixed rate, which is a great value for the consumer right now, and about 60% adjustable rate. And you do have to be careful in a rising rate environment with an adjustable rate product.
Yeah, for sure. Let me ask you about your recent launch, a veteran entrepreneur investment program focused on veteran-led startups. Now you're making your first investment.
Absolutely. We're pretty excited. So one of the best-kept secrets in America is the capabilities of the American veterans. So every year, about 200,000 veterans transition into the civilian workforce. 1 in 5 want to start their own business. They're extremely highly educated, technically savvy, mission-driven. Some of the best leaders you'll ever come across. They know how to accomplish a mission. One of my friends always says it's like a woodpecker. They're going to drive through it. So today we're pretty excited. Our first investment is going to be True Made Foods. It's a naval aviator. He realized in America 1/3 of America's youth cannot join the military because they're overweight or obese. And did you know if you put ketchup on your hamburger today from most of the name brands, you're putting more sugar on that hamburger than putting ice cream on top?
Wow.
So
really?
True Made Foods is doing some really neat things using real vegetables, eliminating the corn sweeteners, and taking the sugar out of the ketchup and barbecue sauces to create a healthier alternative to
I
Americans.
love that. Sugar is just coming at you in all corners that you don't know about. I
Like I say, sugar kills. So
I was counting ketchup as the vegetable in the meal. Is that not going to work? I guess.
James, thank you.
Thank you very much.
We'll be watching that. That's terrific.
Appreciate
James Schenck joining us there.